Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, July 15th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we come together to take a look at the market macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our main hypotheses for the day. This is a subscription room, so if you're interested in checking us out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. We do this live go-to each morning before the market, and then we do live trading and analysis during the course of the RTH session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. All right, so taking a look at yesterday. Yesterday we opened auction at a range. Our primary hypothesis yesterday was basically a rotation, a rotational day, pause day with a move down towards the prior day RTH high and value area high, and then finding buyers and working our way up towards that 2168. We just basically went sideways yesterday. We just chopped around in the open auction and created some balance in around the 2158. News today, we had CPI, core retail sales, and Empire State Manufacturing. Basically, they were all a beat. We just popped a little bit and put in a new Globex high up at 2162. 9:15 we have capacity utilization rate, industrial production. 9:30 we have Great Britain CV leading index. We really don't usually pay attention to Great Britain, but because of Brexit, we've been watching some of the news coming out there. We had that big move off of the rate decision on over in Great Britain. That gave us that pop up to 2168, which is our new all-time high. And then 10 o'clock will be the big news, and that is the preliminary University of Michigan consumer sentiment, business inventories, and inflation expectations. So each morning I like to start my day out the same way. I use a basic candlestick chart with a 9 EMA and a 20 SMA. I work my way from monthly down to intraday. I'm looking for where we are within the trend, looking for slope and separation of the moving averages and where they're being violated or tested. You can see we've had this beautiful upward trend. Tested it at the end of 2015 and beginning of 2016, but the last 4 months we've gotten back above the 9 and the 20, and we're getting a continuation pattern, and we've gone and made all new all-time highs. I mean, this move off of the low has just been absolutely incredible. Going to the weekly, same thing. We've got slope and separation. We are creating a technical gap on the weekly, but remember, it's we have to consider the time frame that it's in. So we're not necessarily going to close it today, but we do have a technical gap, and we should come back and either through time or through price or a combination of both, come back and test that 9 EMA. But the trend itself is up on the weekly. On the daily, same thing. And again, we've got this technical gap, and we've got a possible FUBAR Mr. Sneaky tech gap. A move back to the 9 EMA is probably going to bring us into that into the 38 to 34 range by the time we get there. But we do have this technical gap, but the trend itself is still very strong to the upside. Going to the intraday, same thing. You've got this price paralleling and stair-stepping up on the 9, and trend is intact. Losing a little bit of separation, but still have slope, and the trend is intact on the 4 hour. On the 1 hour, A little bit different story. We had that big move up and then they've come down, violated the trend, and then just basically chopped around. But now we're moved back above the 9 and the 20 with a possible continuation pattern. That we are going to leave a naked cross down here at 2155. 50. Mark that in your journal. It'll be a destination point for any shorts that you're looking for. But the trend itself is continuation pattern on the 1 hour. 30-minute, same thing. We're getting slope and separation and possible continuation pattern starting on the 30-minute. 15-minute, you see we've got a strong upward trend going, but we are putting in a FUBAR possible Mr. Sneaky and technical gap. For those guests that are in the room, a FUBAR Mr. Sneaky tech gap is a trade setup that is one of my favorite setups. Here's a good example of one right here. You create the FUBAR, you get the Mr. Sneaky, which is an inside bar, so similar to a Harami, but with wicks and tails, and then you create the technical gap against the 9, and you're going to move back. If you want one setup that's going to make you money on most any product, learn this setup. But the trend is still up on the 15-minute, but we are creating a technical gap and a FUBAR Mr. Sneaky. Move back to the 9 is probably going to bring us into that 2061, 2059, 58 area with the move back. And then last but not least, the 5-minute. You can see we popped up on the news and we come back and tested the 9 and we bounced off of it and we've got slope and separation. Okay, so that's where we are in the trend in the different time frames. Go to the structure now, or what I should say, lack of structure because of this huge exhaustive move. We've got 1, 2, 3, 4 gaps. We would have had 5, but we did have the pullback 2 days ago and created this balance at around 46. 46 is our target if we get back below 52.75 and come back into this balance and close this gap and come back down to the microcomposite VPOC. Unfortunately, because of the fact that we're in the all-time new highs, we have no real structure to go against long-term because there's nothing there. We broke out of this long-term microcomposite value area, and we're in new price discovery and new highs. We have a very thin area below the 38 and a quarter. 38 and a quarter is going to be still our key line in the sand. We've been using that now for the last 3 days. Anything below 38 and a quarter, I want to be short, and I want to come back and fill in these areas and come back to some of these targets and some of these gaps that we've got going in. It's just not a matter of if that's going to happen, only a matter of when and how much longer we can go. I'm thinking this has got to be an exhaustive gap. I thought it was the exhaustive gap here, but just this market doesn't want to give up. There is a little bit of balance here around the 58 and a quarter. Our VPOC yesterday was 21.58 and a quarter. Our VPOC overnight is 58 and a quarter. So we've basically accepted value in the Globex session after the RTH, and we were accepting the value at 58, and then we popped up and made a new Globex high on the news. So let's take a look at the overnight session. You can see that we opened auction in range of the Globex. Now, I talk about this all the time. I'm going to talk about it again. We opened, I got to move this over because this is important. And this is the second night in a row that this has happened, where we had the Globex gap. Now, what is a Globex gap? A Globex gap is when the ETH session, the extended hour session that runs from 4:30 Eastern to 5 o'clock Eastern, and the Globex open that opens at 6 p.m. Eastern, there's a gap in between. Usually it's only a small gap, 1 or 2 ticks, but this has a 99.5% probability of being closed by the end of the Globex session. It usually closes really quick. In fact, the majority of the time it closes within a minute or two. But the last couple days, last couple gaps that we've had a bigger move down and giving us real opportunity to get really long into filling that gap, and that's precisely what I did last night. You can see that we had a strong move down. We had a couple Mr. Sneakies, and then we had the rotation up, came back down, put in another Mr. Sneaky, and got a rotation up and moved up and closed the gap and went up and made the Globex, what was the Globex high at 59, and then rotated all the way back down into the zippers here and found buyers and basically chopped and worked our way back. And then on the news we had that initial pop, a pullback, and a move back up. So we are getting a little bit of an upper distribution. I doubt that we're going to get a VPOC shift. It was down here. It shifted up here just before the news. But we are creating a little bit of an upper distribution. So let's start moving our numbers over right now. And again, it's coming up into 9 o'clock, and we do have news, and we are only trading 3 ticks off the high, so we're likely to put in a new high before the end of the Globex session. But right now our high is 62, which is just under yesterday's RTH high. I'll probably have to move this at some point in time while I'm doing the session. And then our overnight low is 51.25, and the VPOC is at 58. And we've got a little bit of an LVN. I'm going to use this LVN because this is the one that they bounced off of at 59.75. And why is that saying single and not LVN? Not SLVN, holy cow. And there's a little bit of an LVN here at 57, and that's right near the value area low. Now, for those that are new, trade areas are areas where I'll enter, but they're also targets. So if I'm in a trade, I'm going to scale into a trade area, but I will use that trade area either to do an add-on or to enter a trade, whereas targets are targets. They're just where I'm going to scale, not where I'm going to enter. And we do have this this HVN, which was the VPOC before it shifted down at 54, and that's just below the range low from yesterday. So I'm not going to bother with that. Now, yesterday was a very low probability day. We did not break the overnight high or the overnight low yesterday, and that's only a 4% probability, but it played out. And we took forever to break the IB we didn't break the IB until 1:15, which was very late. Usually the highest probability of an IB break comes in around 11 o'clock Eastern time, so we broke it a couple hours late. So that's all the information that the overnight session is really going to give me. So now let's just move this over, expand this out, and so we already filled the half gap, so we're going to edit this. Actually, I'm going to do this because this is going to be my warning line. And it's going to go down to 52.75, which is also our RTH low from yesterday. And then in terms of levels, again, we do not have anything up above us. We do have a zipper measured move though, right here. Here's the impulse wave. Here's the creation of the zipper. We measure from the low of the impulse to the high of the zipper, and we use the 61.8 extension for our main target. So our primary zipper measured move is 2165.75, and then the extended target is 2168.50, which is 2 ticks above the all-time high. So let's put those in there. 65.25. We didn't take out the zipper measured move yesterday though, so, and we violated it. I should talk about the violation. So let me put this in. Target 50, 68.50. This zipper measured move will remain in effect until we break the fractal low at 53.50 and get below this zipper right here. So this measured move stays into effect until we basically come down. If we break the 53.50, we're likely to test the warning line at 52.75. You can see that we've had buyers stepping in this 51.53 area every time we come down here. So it is finding some strong support down there. So in terms of levels above us, we've got the 60.75 value area high, then we've got the 63, and then above that we're targeting 65.25, the all-time high at 68, and an extended target. There is another measured move up to 2188 on the larger time frame, but I don't think it's going to come into play today. Our daily ATR target is, our daily 20-period ATR is 32.13, but it's got an anomaly in it, or an outlier, which is that Brexit day, which was 120.5 points. So taking the 120.5 point outlier out, our daily ATR is running 27.31. So that puts our daily upside ATR target up here at 2178.50, and it's just above our weekly. Our weekly low is that Globex low on Sunday at 2120, and our weekly 20-period ATR is running 55.33. So off of the low of 2120, our upside ATR target for the week is up at 2175.50. So you have your targets. Off of the new high overnight, and have we put a new high in? No. So 62, 2162 minus the 2736, 2134. There's that 34 number now. Right above that naked VPOC. And that's about going to do it for the levels. So what is, those are our levels, our trade levels. What is our hypothesis? Well, surprise, surprise, we're actually going to open up inside of range and inside of value, something we haven't done basically all week. So we are going to open up in value area. So my main hypothesis is an open auction in range, a move down to take out the naked VPOC, take out the naked close, test the value area, chop around in the value area, and then work our way back up through value, through range, break above the 2163, and go and hit our zipper move up at 65.25, and possibly go up and take out that all-time high and close the week on the high. So hypo 1 is, and people always ask, well, why do you have a bunch of different hypos? Because it's an if-then-that strategy. If this happens, then this is likely to happen, and I'm going to do that. and I want to prepare for all of the potential possibilities because I don't know what the market's going to do. But if I have different hypotheses, then I can use those hypotheses to adjust my trade plan and trade according to what hypothesis is playing out. So hypo 1 is open auction in range, a move down to take out the naked VPOC, naked close, test the value area low, maybe a dip down into the lower range, but basically to find buyers and move up through the value and through the range and break out and go and close somewhere up in new territory and take out the all-time high, putting in a new high. We do have range capabilities to do this because both our weekly, being Friday, and our daily ATRs are still above us. So this is still a possibility. So that's hypo 1. Hypo 2 is an open auction in range, a move up, a failure to break out or a false breakout, find responsive sellers, and then rotate down through, taking out that naked VPOC and naked close and coming down and closing somewhere down in this area right here, with the main target being the 46 back to this micro composite VPOC and the naked VPOC and the naked close, and starting to fill the first gap, if not the second gap. So hypo 2 is open auction in range, a move up, a failed break, and responsive seller stepping in and a rotation down through, chopping around, and then continuation wave, probably a late day probe down into the 46 area. So that's hypo 2. Hypo 3 is a open auction out of open auction in range in value, and then a move up, chop around the 63, and then push up, okay, and basically get a continuation day. I think it's a low probability, but because of the market and the fact we just seem to be being propelled by the plunge protection team, we're just you have to have the continuation as part of your hypotheses. And then hypo 4 is an open auction in range, a strong push down, chop around the 56, push down to the 52, and then a big trend day down with the key target being down here at the key line in the sand at 2138. So basically a failure and a big retrace and a push down to come down and test this 38. Maybe even close the gap down here and come down into that 34, because we do have the range to go down into 34. Taking a look at the Keltner, you can see that the Keltner center line is just below the VPOC, the Globex VPOC. We are above it. A move up to the upper Keltner line is going to take us into a new, break the overnight high and test the range high at 63 from yesterday. A break below the Keltner channel down to the lower Keltner channel is going to take us down into, by the time we get there, probably the 52.75 and our key warning line below. Quick look at gold. We said that gold was going to come back and find some buyers down at that 21.20 area, this 21.21 micro composite VPOC where we broke out. We made that move down yesterday. We found the buyers down there as expected. Always first time back, you're usually going to get the quick rotation up, which we did. And now we're chopping around in this distribution zone. Let me just put a profile on this. So balance right now is 32.90. We've got the CHVN here at 26.60. If we don't come back up and accept this 33 area and try to move up, first target's going to be the 39.20, and then there's not much above us, like where there wasn't much below us until we get back up into this 57.58 with the key line in the sand above us at the 63.50. I still think gold is going to slowly work its way down. My main target, as you know, below is still down here in the 1286, and I moved back towards that composite VPOC. This composite VPOC goes all the way back to 2008, and that's the most traded price down at the 1237.60. So gold, I'm looking to just basically chop around. It's Friday. Gold doesn't usually make much of a move on Friday. Key line in the sand below us is 1312. 20. If we get below that, your first target is the 1303. 50 area, 1303 to 1305. You've got the value area high here at 1305, but mainly the target's going to be that 1303.50, and then extended target down here at the 1286 with another key line at that 1300 in the CLVN. So that's gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. And again, if you're interested in checking us out, just send me an email at Quantum Leap Futures at Quantum Leap Futures at gmail.com, and let me know, and I'll let you know, give you more information about the room. Okay, have a good day. Keep it safe. Remember, it's Friday. You don't want to take losses into the weekend. It spoils your emotional capital. So please, keep your wrist tight and don't let the market get you behind the 8 ball and take a big loss today. Just take quick losses and keep it small and keep it tight. Have a good weekend, everybody.